If you follow this channel, you know our usual playbook. We spend a lot of time evaluating predictable, safe, single-family rentals out in Louisville suburbs. But right now, the math on those standard deals is getting tight. Suburban cap rates are compressing fast, which means the cash flow you used to get on a 3-bedroom ranch simply isn't there anymore. Because of that squeeze, we are seeing out-of-state capital and luxury buyers completely bypass traditional residential assets. They are actively hunting for alternative properties that can force a higher yield. That search leads directly here, to Millionaires Row in historic Old Louisville. Aesthetically and operationally, it is the exact opposite of a modern subdivision. To be clear, these buyers aren't pivoting because they have a romantic attachment to century-old brickwork and historical architecture. They are targeting these specific properties to exploit a highly specific, legally protected zoning loophole. This table illustrates the macro contrast. On the left, the suburban standard offers low maintenance but standard, compressed yields. On the right, the old Louisville asset demands high maintenance, but it produces high yields and permitted short-term rental revenue. Hitting outsized returns in the current market means leaving the comfort zone of a maintenance-free suburban rental and taking on the complexities of urban zoning arbitrage. That brings us to 1256 South 3rd Street, an 1884 Second Empire Renaissance Revival mansion. The interior scale is massive. We are looking at over 6,100 square feet of living space in the main house alone, maintained in museum-quality condition with highly ornate Victorian details, custom murals, and original fireplace mantels. The property also includes a separate, fully renovated 1,543 square foot carriage house sitting right on the rear of the lot, significantly expanding the total guest capacity. Despite being built in the 19th century, it functions extremely well for modern logistics. With a walk score of 82, placing it near local restaurants and public transit routes, plus rare off-street parking protected by a privacy fence. This combination of multiple structures, high walkability, and dedicated parking creates a turnkey hospitality compound designed to capture premium tourist dollars. If you operate short-term rentals anywhere right now, you already know the biggest friction point in the market: city crackdowns and aggressive local regulations, effectively shutting down Airbnbs. In Louisville, the main hurdle is the Conditional Use Permit, or CUP. If you want to operate an Airbnb in a standard residential zone and you don't live on the property, the city requires you to secure this permit first. Securing a CUP is brutal. You have to file an application, undergo public hearings, and notify all neighboring property owners. It creates a severe bottleneck that tilts most investment timelines. This quadrant chart shows exactly why 1256 South 3rd Street is so valuable. Because this specific property possesses dual commercial and residential zoning, it plots all the way in the low-restriction, high-revenue zone. It completely bypasses the CUP requirement. That rare zoning designation legally shields your right to operate a high-volume Airbnb on this footprint without asking your neighbors for permission. But operating under that commercial classification carries a strict trade-off. You are no longer managing a passive long-term rental. You are running a legitimate 5-star hospitality business. That means the owner takes on full liability for collecting and remitting transient room taxes directly to the local government, requiring meticulous bookkeeping. The administrative burden is heavy, but the dual zoning status provides a regulatory moat. It secures the property's cash flow against the legislative risks that constantly threaten standard suburban Airbnbs. This chart visualizes the baseline revenue. During standard operating weeks, the 3-bedroom carriage house generates around $230 a night. Next to it, the 5-bedroom guest portion of the main estate pulls in a baseline of $430 a night. Those baselines are solid, but the catalyst for outsized returns in the Louisville market relies on major citywide events, primarily the Kentucky Derby, which brings a massive, highly concentrated influx of travelers into the city. Going back to our revenue chart, look what happens to the pricing power during Derby week. The carriage house spikes to $800 a night, and the main house skyrockets to $1,200 a night. Combined, the property has the potential to gross $2,000 a night during peak demand windows. Travelers willingly pay those extreme premiums because they are seeking out an authentic, historic Louisville experience, which they simply cannot get in a generic downtown hotel room. Hitting those numbers requires flawless execution. You are managing dual income streams, which means coordinating high turnover rates, aggressive cleaning schedules, and constant guest communication. A single week of peak event pricing at this property generates more gross revenue than a traditional suburban single-family home yields in several months of rent. This decision tree shows how buyers typically approach a property like this. You can be a pure out-of-state investor and hire a local property manager, or you can take the owner-operator path, utilizing a luxury house hack to maximize your margins. If you choose the owner-operator route, this property is already partitioned for it. The rear of the first floor contains a dedicated owner's quarters, featuring a galley kitchen, an eating area, a bedroom, and a full bath. By living in that rear suite, you completely eliminate your own housing expense, while the second floor, third floor, and the carriage house generate all of the short-term rental income. The primary trade-off is proximity. You are living on the exact same physical footprint as a constantly rotating cast of vacationing guests. That requires strict boundary management and noise control. You forfeit the quiet isolation of a suburban cul-de-sac in exchange for sharing walls with tourists. This house hack model is not passive living. It is an active, on-site hospitality job that directly trades your personal privacy for maximum financial yield. There is one final layer of due diligence to consider. Old Louisville is the third largest historic preservation district in the United States. When you buy an 1884 Victorian asset here, you take on the role of a historical steward, and the local government enforces that stewardship strictly. If you need to make exterior architectural changes, update materials, or execute heavy capital expenditures, you cannot make those decisions unilaterally. Every exterior project must pass through a stringent Historic Preservation District approval process. You have to submit plans, wait for committee reviews, and adhere to specific material guidelines, all of which significantly slows down renovation timelines. The ornate historic facade is the exact feature driving your high Airbnb nightly rates, but it also guarantees that your exterior maintenance will move at the deliberate, mandatory speed of local government approval. Ultimately, 1256 South 3rd Street is the wrong asset if you want a passive, hands-off investment, where you collect a monthly check and rarely think about the property. It is a precision financial tool built for active hospitality investors. If you have the operational capacity to leverage a rare zoning loophole and the willingness to act fast, the math scales aggressively. If you are evaluating properties in this area, click the link in the description to download our Old Louisville Investor Due Diligence and Zoning Kit. It will walk you through exactly how to check CUP rules before you make an offer. For highly analytical investors, we linked a Medium article below breaking down the exact mathematics and tax implications of the Derby Week projections. Check those resources, run your numbers, and we will see you in the next breakdown.